Well, Trump's victory has certainly created massive uncertainty for the markets. And market participants in particular are very worried about the policies that President Trump might pursue, particularly with respect to trade and immigration. There's also a good deal of worry about what President Trump might mean in terms of the Federal Reserve and interest rate policy going forward. Trump has never been a fan of Janet Yellen, and the expectation is that he won't renominate her to Fed chair when her term is up in January of 2018, and the person that he puts in may actually favor higher interest rates than what we've enjoyed. So there's an awful lot of nervousness in the markets, and I understand that. But amidst all of this uncertainty, I do think it's important to actually recognize that many of Trump's proposals could be quite positive over the longer run for the U.S. economy. I mean, certainly on the campaign trail, we didn't hear Trump talking very much about how his economic plans could boost economic growth, but that's exactly what I think could happen over the long term. I mean, in particular, I've always been very encouraged by Trump's proposals to lower tax rates, particularly with respect to businesses. Trump has a plan to cut business taxes, and certainly the outlook in terms of the regulatory burden on businesses, I think, is going to be much less under President Trump than it would have been under President Clinton. And I'm not necessarily the only person who thinks that Trump's plans are positive for growth. The Nonpartisan Tax Foundation ran Trump's tax plan through their model, and they estimated that versus the long-run baseline that's currently projected over the next 10 years by the Congressional Budget Office, if Trump's plans were to be put in place, as I said, over a 10-year period, GDP growth might be boosted by roughly 7%. Capital spending might be boosted by more than 20%. We'd get higher employment and higher wages than the current baseline projects. Now, of course, all of this comes at some cost. The deficit would be estimated to be at least $2.5 trillion larger. And of course, that worries some, that we may have a big increase in U.S. debt outstanding. But I also think it's important to recognize in the U.S. and arguably around the globe, we need more expansionary fiscal policy. Monetary policy alone can no longer shoulder the entire burden of having to support certainly the U.S. economy through lower interest rates. So Trump's plans, I think, have the potential over the longer run to boost growth and to rebalance the monetary fiscal policy mix in the U.S. And I think all of this could end up putting the U.S. economy in the longer run on much stronger and sustainable footing.